Welcome to the Deep Dive. I'm your host, and I want you to think about a moment of high pressure.
And I'm the resident expert today. Yeah, high pressure moments are something we all know too well.
Right, maybe you're staring at a position you got real size in,
Mm-hmm.
and the bottom is just falling out of the bid.
Mm-hmm.
Or you're facing down a massive high-stakes decision at work where all the variables are just spinning out of control.
It's terrifying.
It really is. And usually the first thing we tell ourselves in those moments is some variation of, I just need to stay calm.
Right. Just breathe.
Exactly. I need to focus.
Mm.
I need to dig deep and find the willpower to ride this out.
Which is such a common trap.
We've got this deeply ingrained cultural belief that if we can just master our own minds, we can white-knuckle our way through any storm.
Yeah, we place an enormous amount of faith in our ability to mentally muscle our way through stress.
We really do.
We assume our rational brain will always eventually take the wheel if we just try hard enough. But it's a pretty radical shift in perspective when you really start to dismantle that idea.
And that's exactly the core assumption we're challenging today. We're pulling from a single, incredibly focused source for this deep dive.
It's a great one, too.
It is. It's a February 2026 article by an author who goes by the Trading Job. And it's titled, Trust Your Instruments: The System Over Willpower.
Such a powerful title.
Right. Our mission today for you listening is to uncover exactly why your brain naturally sabotages you during moments of deep uncertainty.
Yeah.
And more importantly, how you can build an external system to bypass those flawed primal instincts entirely.
It's an important framework to explore because, the concepts in this text, they go far beyond just managing a stock portfolio.
Definitely.
The author is really getting down to the brass tacks of human behavioral psychology and evolutionary biology.
Okay, let's unpack this, because the author starts with a fairly brutal reality check.
They do not hold back.
No, they point out that we spend years reading trading psychology books. We download meditation apps.
We do breath work.
Right? All trying to force our brains to remain perfectly stoic during a flash crash or a face-melting rally.
And it rarely works.
I'll admit I have totally fallen into this trap.
Oh, same here.
I vividly remember staring at my screen back during one of those crazy meme stock rallies, watching a position completely implode.
Heart pounding.
Sweating. My heart was hammering. And I just kept telling myself, be rational, don't panic.
Right, but the author argues we're fundamentally misunderstanding the problem there.
Exactly. We think we're struggling to control our minds, but the reality is our minds are already controlling us.
That physiological response you just described, the sweating, the elevated heart rate, that's the psychological baseline we have to establish here.
It's physical.
It is entirely physical. When you're sitting in front of a trading terminal, watching a red candle slice through your support levels, the author argues you are no longer the one making conscious, rational decisions.
Wild to think about.
At that precise moment, fear, greed, and an incredibly powerful primal instinct to survive effectively hijack your nervous system.
The rational thought just goes out the window.
It doesn't just take a back seat. It's practically thrown out of the moving car.
Yeah.
Trying to fight a deeply ingrained evolutionary survival response with something as fragile as willpower in real time is just a losing battle.
Because your biology is literally screaming at you that you're in physical danger.
Exactly. And willpower is simply not a strong enough shield against hundreds of thousands of years of survival programming.
Which brings us to a phrase in the text I thought was a fantastic mental model. They call it the vacuum of ambiguity.
I love that phrase.
The author uses this to describe the specific environment where our minds take over and completely derail our execution.
What's fascinating here is how the author dissects the mechanics of that vacuum.
Right.
When we say vacuum of ambiguity, we're talking about a void of clear direction.
A lack of rules.
Exactly. The text argues that the mind only defaults to chaos when there is a vacuum of authority. If you don't have a strict step-by-step system for how to operate, your brain desperately searches for a leader.
And what does it find?
In the absence of a concrete plan, it defaults to the oldest, most reliable leader it knows, your amygdala.
The fear center. But shouldn't years of screen time or professional experience overcome that?
You'd think so.
Like, you'd think that at a certain point, a seasoned trader or a high-level executive wouldn't fall prey to basic evolutionary programming.
You'd really think so, but the text makes it incredibly clear that exposure to ambiguity doesn't inoculate you against it.
It doesn't make you immune.
Not at all. If anything, prolonged ambiguity grinds down your cognitive reserves.
It exhausts you.
Exactly. The evolutionary programming the author highlights is incredibly predictable. It really boils down to two basic instincts.
Running away from pain.
And chasing pleasure.
Right. Now, since you listening already know the mechanics of the market, we don't need to explain what buying the top or selling the bottom is.
We've all been there.
But we need to understand why we're compelled to do it despite knowing better.
Yeah, when the market is euphoric, the dopamine hit of chasing a massive green candle completely overrides your risk management.
You just want more of it.
Exactly. And inversely, when the market is dumping, the cortisol dump literally forces you to seek immediate relief from the pain.
Which means hitting the sell button at the exact moment of maximum opportunity.
Because the pain is too much to bear.
So if you find yourself constantly trapped in that emotional roller coaster, getting chopped up in a volatile range.
Or revenge trading after a stop out.
Yes, revenge trading. The author is saying you have to stop viewing this as a personality flaw.
That is so cute.
You don't lack discipline or courage. You're just operating without a map.
Mm-hmm.
In the market, ambiguity is your absolute greatest enemy.
And that's a massive relief, right?
That's huge relief.
It separates your self-worth from your execution. The author frames this erratic behavior as a symptom of a deeper disease.
The disease of operating in a discretionary void.
Exactly. When things are ambiguous, your primal brain just fills the gap with emotion.
The author uses an aviation analogy here that I thought was pretty spot on regarding how dangerous that discretionary void can be.
It's a perfect analogy.
Here's where it gets really interesting. They ask us to imagine a pilot flying into a thick, pitch-black storm cloud.
Complete darkness.
Instantly, they lose all visual reference to the outside world. No horizon, no ground, just darkness and turbulence.
It's the perfect setup to explain a deadly phenomenon known in aviation as spatial disorientation.
Spatial disorientation.
Yeah. When a pilot loses visual reference to the true horizon, their inner ear, the vestibular system they rely on to balance and navigate the physical world, it starts feeding their brain false information.
It lies to them.
It actively lies. The text details how a pilot's own biology will make them feel with absolute terrifying physical certainty, like the plane is flying straight and level,
Even when it's not.
even when it's actually in a death spiral banking sharply toward the ground.
The idea that your own body is actively lying to you is wild.
That's terrifying.
But how does that actually map onto a modern trading screen? We aren't experiencing G-forces at our desks.
We aren't experiencing physical G-forces, no. But we are experiencing financial and emotional G-forces. And those trigger the exact same neurological pathways.
That makes sense.
When volatility strikes, let's say we get a massive shock to the system, like the March 2020 pandemic crash.
Or unexpected CPI data that sends the indices into a tailspin.
Exactly. The market becomes that dark storm cloud. Your senses will lie to you.
It will betray you.
Your mind will conjure up a narrative to convince you to hold on to a losing trade just a little bit longer, whispering that a bounce is imminent.
Always waiting for that bounce.
Or it will terrify you into selling a massive winner way too early because you're scared of giving back unrealized gains.
So the pilot's willpower to fly the plane safely is completely irrelevant if their senses are feeding them a false reality.
Completely irrelevant.
To survive, they're trained to do one specific, incredibly difficult thing.
Yeah.
They must ignore their brain. They have to stare at the artificial horizon on their dashboard and trust the instruments.
Trust the math.
They have to follow the math even if every nerve in their body is screaming that the instruments are wrong and they're upside down.
The author is uncompromising on this point. Trading is exactly the same.
You have to ignore your mind.
You must trust your instruments.
Let me push back on that for a second.
Sure.
What if the instruments themselves are flawed? What if the market conditions fundamentally change, like moving from a massive bull run into a choppy, sideways bear market?
That happens all the time.
Right? So do you still blindly follow a system you built weeks or months ago?
That's the crucial distinction here. You don't blindly follow a flawed system forever. But you absolutely do not try to fix the system while you're in the middle of a tailspin.
Oh, wow. So timing is everything.
Exactly. You evaluate and tweak your system outside of market hours when you are safe on the ground.
When things are calm.
Right. When the market is open and you have capital at risk, you are in the air.
The storm.
That is not the time to second-guess your instruments based on a gut feeling.
Let's talk about the actual dashboard then. If we want to strip the mind of its destructive power, how do we build these instruments?
It comes down to rules.
The solution provided in the text is to replace ambiguity with absolute certainty. You can't leave any room for interpretation when the pressure is on.
None at all.
The author lays out 4 specific pillars. 4 exact parameters that must be dictated before you ever take a position.
And we should dig into each of these because they are the literal gauges on your dashboard.
Okay, let's do it.
The first pillar is the entry. This isn't just about having a general idea of where you want to buy.
Like saying, oh, I'll buy around 50 bucks.
Right? That's not enough. You need to know exactly what technical or fundamental conditions must be met to trigger the trade.
Right. And it's not just a checklist. It's about the discipline of waiting for the checklist.
Which is the hardest part.
We all know the feeling of watching a setup almost form. It's 90% there, the momentum is building, and FOMO kicks in.
Fear of missing out is powerful.
You jump the gun because you don't want to miss the move. But if the rigid conditions aren't met, you're supposed to sit on your hands.
Which is incredibly hard to do without a system.
So what's the next gauge?
The second pillar is the buy and sell rules, which encompasses your position sizing and time horizon.
How much risk are you putting on the table?
Exactly. Are you scaling in or going in full size? Every detail of the operation needs to be defined in advance.
So you aren't doing the math while the price action is moving against you.
You don't want to be doing mental math in a storm.
No, definitely not. The third pillar is arguably the hardest one to execute psychologically, the stop loss.
The ultimate test of discipline.
You have to determine in advance the exact point where the trade is invalidated. No second guessing, no hoping for a mean reversion.
If the price hits that number, you are out.
But we've all been there. The price approaches your stop, and you just manually drag the line down a little bit on your chart to give it room to breathe.
Moving the stop loss is the ultimate symptom of spatial disorientation in trading.
Oh man, that is a great way to put it.
When you move that stop, you are trusting your panicked inner ear over the altimeter.
You're ignoring the dashboard.
You're saying my original rational analysis from when I was calm is wrong, and my current terrified, adrenaline-fueled hope is right.
Which is never true.
Never. The text makes it clear. The stop loss is the point of invalidation. When you move it, you no longer have a system. You're just gambling.
It's gambling. And then there's the fourth pillar, the target, knowing where you'll take profits.
Because greed is just as dangerous as fear.
It's just as easy to let greed ruin a successful trade as it is to let fear ruin a losing one. You get a 50% on a swing trade, and suddenly you're imagining buying a new car.
We've all planned out spending unrealized gains.
So you cancel your limit order and hold out for 100%. Then it retraces and you close it out for a loss.
If we connect this to the bigger picture, the brilliance of defining these 4 pillars, entry rules, stop loss, and target, is the profound psychological relief it provides.
It really takes the weight off.
By making all these decisions before you ever put your capital at risk, there is literally nothing left for your mind to panic about when the market gets turbulent.
The mental heavy lifting is already done.
Exactly.
You're doing the thinking when you're safe on the ground, so you don't have to do the thinking when you're flying through the storm. You just execute the plan.
It sounds simple, but it is profound.
But the author doesn't just leave us with a neat system and call it a day. The final section of the text is a pretty heavy reality check called Operating in the Dark.
Yeah, this part is sobering.
They force us to accept some very humbling limitations about what we can actually know, even with the best system in the world.
It demands a level of humility that goes against the ego of most market participants.
Traders have big egos.
They do. The source emphasizes our total lack of control and our fundamental lack of information. Think about it. When you look at a depth of market chart or level 2 data, you are looking at shadows.
Just numbers on a screen.
You do not know who is on the other side of your trade. You have no idea if a massive institution is using dark pools to quietly accumulate millions of shares.
Or if an algorithmic fund is about to dump a massive block order right into your bids.
You are completely blind to that.
And more importantly, we don't know the future. The author explicitly states, we absolutely do not know what is going to happen in the next 5 minutes, the next 5 days, or the next 5 months.
Nobody does.
The market is an infinitely complex mechanism driven by millions of irrational actors. We are quite literally flying in the dark.
That is the ultimate paradigm shift the author is pushing for. So many people try to predict the market.
They want the crystal ball.
They act like analysts trying to impose their thesis on an uncontrollable environment, and then they get angry when the market doesn't agree with them.
Which makes no sense.
But the author is telling us that because we cannot predict the market and because we certainly cannot control the market, the absolute only thing we have control over is our execution of our system.
So what does this all mean? It means we have to stop trying to be the hero of our own trading journey.
Drop the ego.
Stop trying to outsmart the algorithms and stop trying to master your emotions through sheer willpower while the world is spinning around you. You cannot outthink a storm while you are inside of it.
Your struggle is not a lack of mental fortitude. Your struggle is a lack of structure.
Yes.
The mandate from the text is clear. Build a robust dashboard, define your rules with clinical precision. And when the storm hits, and it always hits, you do not try to analyze the wind or the rain.
You just look at your instruments.
You just look at your instruments and you execute. You don't need a stronger mind. You need a stronger system.
A stronger system. That's the takeaway. To you listening, thank you for joining us on this deep dive.
It's been a great discussion.
Whether you're actively managing a portfolio, leading a division through corporate restructuring, or just trying to navigate a chaotic week, I hope this framework of choosing structural certainty over brute force willpower instantly relieves some of the pressure you feel.
It really should.
Do the work on the ground. Build your dashboard. And